Hello and welcome to the Maxim Property Securities Fund monthly report for May 2013. I'm Winston Samet, Fund Manager of the Maxim Property Securities Fund. After a strong start to the month, indications that the US Federal Reserve would begin to wind up its bond buying program saw markets fall back in May. At home, the cash rate was cut by 25 basis points to an all-time low of 2.75%, precipitating a 7.7% fall in the exchange rate, which ended the month at 95.77 US cents. 90-day bank bills dropped in line with the cash rate, falling 16 basis points to 2.78%, while the yield on 10-year bonds rose 26 basis points to 3.35%. The S&P ASX 300 A-REIT accumulation index fell 3.7% in May, outperforming the broader equity market's fall of 4.5%. Over the previous 12 months, the A-REIT index has returned 30.6%, outperforming the general equities market, which rose by 26.5%. Industrial A-REITs offered the best returns in May, falling by 1.3%, followed by commercial A-REITs, which returned negative 4.1%. Diversified A-REITs were the worst performers, falling 5%. REITs raised a total of $1 billion through institutional and entitlement offers in May, including a $400 million raising by Stockland to fund its development pipeline and reduce debt, and a $400 million raising by Mirvac to fund the purchase of a $584 million portfolio of prime office assets. The Maxim Property Securities Fund returned a negative 2.94% in May, outperforming its benchmark, the A-REIT index, by 0.72%. Since inception, the fund has outperformed its benchmark by 0.92%. During May, the fund benefited from exposures to Ardent Leisure Group, which rose 9.4% on the back of the strong performance of its US assets, and also from its underweight exposures to CFS Retail Trust, GPT Group, Commonwealth Property Office Fund, which fell 8.6%, 3.9% and 5.2% respectively. Exposures to Carindale Property, which fell by 4.2%, Stockland Group, which fell by 5.7%, and Westfield Retail Trust, which fell by 6.7%, had a negative impact on the fund's performance. At the month's close, the fund's investments comprised 14 listed securities representing 95.7% of the portfolio, and unlisted investments represented 1.8%, with the remaining 2.5% held in cash and other liquid investments. The outlook for the sector remains positive as investors continue to chase yield in an environment of low growth and low interest rates. Maxim targets securities which offer consistent, growing income and long-term capital appreciation. To this end, and notwithstanding current market volatility, Maxim expects to remain close to fully invested to take advantage of the round of distributions in June. The fund's preferred exposures include Ardent Leisure, Australian Social Infrastructure Fund, CFS Retail Trust, Dexus Property Group and Stockland Group. We hope you found this video report interesting and informative. If you have any questions or comments about the issues raised, please don't hesitate to contact us using the information on your screen.